Good morning, everyone. This is Srikant Rajan from mpiinvest.com and welcome to the Stock Market Podcast, the only platform where you learn to invest and trade in the stock market free of cost. Coming to the market today, the Nifty is expected to open with a major gap down. In fact, Nifty opened with a gap up yesterday at 16,318 and went up to a high of 16,399. But exactly as we had mentioned in the morning podcast yesterday, 16,350 to 400 was acting as a resistance, and we could see the Nifty falling from there. In fact, Nifty closed at 16,240, slightly below 16,250, which was a support. But today looks like all things are looking bad as US markets actually sank, I would say, yesterday. Yes, in fact, the Walmart and Target, both two major retailers in US, actually came up with the results, and it was much below expectations, and we could see stock like Target sinking down by almost 25% in a single day. And what else could we expect in the market? The Dow actually has shed 3.57%, one of the biggest falls since June 2020 during the pandemic. S&P 500 was also down by 4% and Nasdaq was down by 4.73%. Things are looking very bad in US. In fact, globally we are seeing a food crisis and inflation going up. Yes, in fact, India is in a much better position today. In India, the only challenge that we have is the inflation going up, which is still in line with, very close to in line with what we had expected. But if you look at globally, UK majorly, the inflation is almost at 9%. And the worst part is they're all people who don't have proper in-house farming, which actually is, having a big dependence on countries like India, where they get their wheat and grains from. So such things are something which is not looking good there, and that's exactly why we could see India in a much better position, and European countries which don't have, which have major dependence on the imports for food grains in trouble. So with this rise in fuel and food price hike, the inflation is on a major hike, and I right now feel probably this could actually be the start of a recession. Yes, this could be a part of a global recession. So that's something I feel. If that is the case, we've got much more fall coming ahead. So in that case, yes, we need to plan our finances and investment carefully. I will discuss in detail more about this on the Sunday's meeting. Be sure to be there. We will be discussing this in detail and our plan for ensuring that our fund is growing in such a market. So that's exactly what we'll look at. So now there was also news from India Ratings and Research, which says that inflation in India is going to be on a 9-year high at 6.9% for the entire financial year of 23. So that's something not good. Now, with all this negative, I don't want to bog you down, but understand India as an economy is a great place to invest if you want to grow your money in the future. I could say some examples, as there was a comment that came in from the Union Minister, Mr. Rajiv Chandrasekhar, yesterday, said that India is rapidly emerging as a leader in manufacturing as well as exports. In fact, e-commerce and logistics infrastructure has played a critical role in cementing India's position as trusted manufacturing partner of the world. So things are looking good there. In fact, if you look at the Indian economy as well, even the footfalls in shopping malls have actually increased so much that the store demand and rising sales have actually increased the rent in these shopping malls. In fact, you could keep a watch on stocks like DLF and Brigade, which actually is into majorly leasing out spaces in the mall sector. In fact, with all these things happening, there was also a survey done by AON consultants, which says in India, the top CEOs are going to see a 8.9% pay hike in this year 2022. So the major reason, they've not had a great pay hike in the last 2 years due to the pandemic, and now every company wants to ensure that good human resource is staying back with the company. So that's something we could see, which can actually be a slight negative to the companies, because we could see it on the expense side and reducing the profitability. However, there are more good news. In fact, sugar stocks are back in focus because government has approved the increase of ethanol blend in petrol to 20%. In fact, we have been staying away from sugar stocks because it is a cyclical in nature, because sugar stocks go up and come down based on the season and the demand. But if there is larger use of sugar or ethanol blend in petrol, we could see the sugar stocks being stable throughout the year. If that happens, I would also be entering. But till then, I am not. Until things are clear, I would not be entering a sugar stock as of now. Coming to the monetary policy, we actually I spoke about it yesterday evening in the podcast. Just a brief but important point there is the monetary policy committee is divided on the increasing of rates. In fact, there were also comments that increasing should happen to almost 100 basis points, which is not very practical. But then, yes, there are some price hike going to happen on the next MPC meeting happening between June 6 to 8. So we could see some more rate hikes in the next month. Coming to some good news for the Bharti Airtel and Jio, I would say, because the Digital Communication Commission (DCC) has accepted telecom regulator TRAI's proposal to reduce the prices. In fact, they've approved almost 35% reduction in prices for the 5G spectrum, but though the industry has been demanding almost 90% cut in prices. So that's something we need to watch out. Let's see how Bharti Airtel and Jio, that is Reliance, responds today. We also see a great news coming from Adani Enterprises. In fact, they have a fully owned subsidiary, Adani Health Ventures, which is entering into the healthcare sector. So Adani has been in news every time in the recent past. They also have become the India's second largest cement manufacturing company, and now they're getting into healthcare. So things are looking good, but of course, I still don't have that confidence to enter into them as long as the PE in most of their companies actually comes down. When all this is happening, ONGC is trying to make use of the situation. In fact, they are already trying to raise their stakes in Russian oil fields. In fact, due to the war, many people want to exit. In fact, Shell is also exiting its stake in Russian oil fields. So probably ONGC is considering taking all these things, which could actually be a great opportunity to secure energy supplies at a very cheap price. But of course, the risk is involved because we don't know when the war is going to end. But if that happens and the war ends, we could see a great traction in ONGC. We had booked some profit in ONGC some time back and we had exited it. Let us see how and when we can re-enter it. There is also news from Ruchi Soya, which is going to acquire the complete food business of Patanjali Ayurved. In fact, the transaction is going to happen for rupees 6.9 billion, and after the transaction, the best part is Ruchi Soya will have a fast track entry into FMCG category. That's something good. In fact, Ruchi Soya is a great company, and after the regulatory approval, the name of the company will also change to Patanjali Foods. So that's another stock that we can have in our radar. Let's see how and when we can enter into it. So positivity continues as JSW Group is investing $2 billion into a company called Maitra. So Maitra is a company which is into green energy. So like I told you, the future is of course green energy, and most of these big groups want to enter and ensure that they are part of this growth strategy. So this huge investment actually brings in a lot of solar and wind power into the JSW Group company. Some bad news for, I don't know, should I call this bad news also? It could be because sometimes it could be a good news as well. The bad news is that Antfin and Alibaba have sold their entire stake in Paytm. Yes, so Paytm Mall has been completely exited by these two companies. I would say it as a negative because they've sold out their holdings. But then the positive part I would say is this entire stake was bought by Paytm e-commerce, the parent company of Paytm Mall. So that's something good because that is the kind of confidence that the company has that they have not sold it to the open market, but it was bought by the parent company. So that is kind of okay with it. So let's see how Paytm reacts to it today. That's something on the watch list again. So I hope all those people who are still invested there take, I'm still of course praying that you guys come back to profit someday. ITC did come up with good results yesterday. The net profit has risen by 12%, and year on year 11.8% rise is something great. The net profit has touched 4,191 crores. The revenue has also risen by 15.3%. In fact, like I told you, the ITC stock has been rising continuously for the past few weeks. So there are chances we could see some profit booking coming in today. LIC Housing has reported 174% surge in net profit. In fact, they reported, the quarterly profit at 1,114 crores. The revenue has also gone up by 6.3%. Right, so that's something great. Again, LIC Housing Finance is there in most of our portfolios. Let's see how it reacts there. Indraprastha Gas also net profit has gone up by 9%. Revenue has also risen by 55%. Things are looking good there. But something bad again in comes is Manappuram Finance. In fact, the net profit has fallen by 44%. So the results are really bad at that side. Let's see. We had exited Manappuram Finance with a good profit just about 1 or 2 weeks back, I guess. So I am sure most of you are not holding it. Coming to some major results coming in today, we have Ashok Leyland, which I told you we are expecting some good results because they have actually increased the prices and the prices have been passed on to customers. So that's something good. Bosch is coming up with the results. We also have Godrej Consumer Products coming up with the results. So most of the FMCG sector would be in focus today. So as I said, SGX Nifty is indicating a gap down opening. In fact, as we speak, it is at 15,950. It could be around 16,000 to 15,950 could be the range in which we open today. And from there, we could see some small rise, but then with each rise, we would also see some sell off. So be watchful of the market. Let us see how we manage our positions, but all the call sells. In fact, I did feel a small, intuition that market could actually go down. That's exactly why we had sold the calls in options yesterday in Gold Club. So probably we should see some good profits there, but there is one portion of 16,000 PE which has to be managed. I will, share how things to be managed there in the Gold Club directly. So let us look forward to a great day in the market. Let us expect the market not to fall much more. Right. So with that, this is Srikant Rajan signing off. Goodbye. Have a profitable day.